Welcome back to the Investor Professor podcast. This is Dr. Ryan Peckham, and this is episode 154. I'm joined today with Cameron, and we're going to talk all things Thanksgiving, do a little market update since the last time we talked, which was way back in September. It's amazing how fast time passes. We got a lot of things to catch up on. We got the election, we got Fed rate cuts, we got how's the market looking going into the end of the year, how's it looking for starting in 2025. We'll do a rundown on my interview with Guy Spier and all things just kind of catch up over the last couple of weeks. So get your mind right and let's get to work. Welcome back to the podcast, everybody. Episode 154, joined by Cameron. Cameron, how are you, my friend?
Doing good. Happy Thanksgiving.
Happy Thanksgiving.
Brought to you by Ozempic.
Brought to you by Ozempic. Probably, yeah, that's probably true. There's some other ones on there, but that's the mainstay. Speaking of which, so Eli Lilly's like taking a little bit of a hit, but now Biden's trying to get that like approved from like healthcare plans and stuff. That could be a game changer.
If it becomes the next multivitamin, right, where everyone's doing Ozempic, we got a problem, I think.
Yeah.
Oh, yeah, because the diet's not the problem. We're just going to shoot, put a shot in every day or whatever it is.
Yeah, it is. So before that, are you a Thanksgiving fan?
I am. The sweets.
The sweets, yeah.
Yeah.
That's kind of me, too. I just kind of eat the stuff to try to get to the pies.
I'm not a big turkey guy. I feel like it's kind of dry. I'll be honest. I know maybe that's a Thanksgiving sin.
Well, if it was that good, we'd eat it
all the time.
All the time.
Yeah,
I mean, I kind of like the videos of people like blowing their houses up with the fried turkeys and stuff.
Oh yeah, in the backyard, you got dad with the shaky, broom with the stick coming down.
Yeah. Well, and today's Black Friday. We're recording this on Black Friday, which, by the way, I mean, I'm so thankful for online shopping, but I so miss the nightly news on Black Friday of people like beating each other down for the specials. Like that was a special period of time that is no longer like as good as it, because you can just do so many things online, and you have the whole weekend, right? Like you have the whole weekend, and it's so funny too, because like I feel like there's a lot of companies that are in on like the Black Friday thing. Yeah. Like when you check your email and you're like, why are you sending me like a Black Friday coupon? I got one from like an internet web host today. They're like, hey, get the Black Friday deal today.
I got one from my barber today, actually, which I think
that's
is
just
fun.
mean.
But
that's just
you need one of those, right?
I didn't get one of those from my barber today.
Yeah, and this year it was a little different because I kid you not. So I do remember this. I'm young, I know, but I do remember people would camp out overnight at Walmart or Target or wherever, right? Because they wanted the TV that was $50 off.
Yeah.
But now it seems like there's Black Friday, but Black Friday is the week and a half before leading up to Thanksgiving. Like it's all week long. Is that just me?
Well, no, because they used to have Black Friday and then they'd have Cyber Monday.
Correct. But now it's like...
But it's the whole time now because there's no real disparity between the two. It's just... And there's some pretty good deals. Like some places... It's a little ridiculous. Like I got one the other day and it's like, hey, you can get a polo shirt for whatever. And then you go and the only sizes they have are like extra small or like
kids large.
Yeah. Or like extra large. And I'm like, okay, you don't really have like, so some of them, I feel a little bit of it, is clickbait, but some of it, you can actually get some pretty good deals.
Yeah. Did you buy anything for Black Friday?
Not yet, but tonight I probably will. I usually stock up on like shoes, shirts, things that like I know I'm going to use. Like I usually do things like that,
I think you and I are the same in that because I'm not a big shopper, but I feel like the deals are great. And if you go shopping, say once a year, right? Yeah. This is probably the time to do it.
Yeah. I'm not like, obviously, but I don't know, not me, but I don't really enjoy shopping.
I don't either.
But like last year I ordered 3 pairs of shoes, the same shoes. And then I just like, every however long I would rotate. I would throw the other ones out. Like it's just kind of ridiculous. Like if I find something I like, I always get worried that they're going to change the style, get rid of it. And so I'd really just kind of load up on it. And then I just wear it for a year.
It's efficient. It is. And all of it's online now. You don't even go in the store.
Yeah, which I think for most men is like fantastic.
I do agree with that. Yep.
So, well, we're looking here at the market. So we'll see the Black Friday numbers, and I know you have those, but let's just do a market check. So the S&P 500 year to date is up 26.47%. The NASDAQ is up 28%, and the Dow Jones is up 19%.
Is that a good market? Is that a good market?
It's pretty good. Yeah. So there have only been 8 times since 1950 where the S&P 500 was up 20% 2 years in a row. So if the S&P 500 finishes up 20%, which all indications seem, unless December's an absolute disaster, but December's typically a very good month for the market, the S&P will finish up 20% 2 years in a row. So my question to you is, do you know what happens in the third year after that?
The way you phrase that, it seems like it's not going to be great.
It's not. No, actually,
not as good. I'm sorry. Let me rephrase. Not as good, but still okay.
Yeah. So I was worried about this. Is something I've been worried about
because we have the election too.
That had the election, yeah, which we haven't even talked about yet. But 6. So of the 8 times that happened, right? Since 1950, 6 of the 8, the market has been up an average of 13% the next year, which that really did surprise me.
What was that? That disappoints you?
No, that surprised me.
Surprises you? Yeah, that makes sense. I mean, that's still above the average, right?
Yeah, it is. So because you have to think, like, as money managers, when you have a good market, it gets harder and harder to find good companies to invest in
because everything looks good.
It's like, more people call me, more people, I get more referrals, all this kind of stuff when the market's doing well. And it's like harder and harder to find like good companies at good values, at good prices to invest them in when the market's, been doing well for the last 2 years. I mean, much different than like if we would have had this conversation in 2022 when everything looked, it's like, geez, there's so many good companies to invest in.
I think it's a question of, okay, if everything's up, the saying, high tide lifts all boats. What's going to be the boat that stays high, that has a consistent, whether it's if you're looking at margins or whatever, but if things get, take a turn or slow down a little bit, what are the companies that are going to continue?
Yeah. And also too, there's been so many investors that have missed a lot of this market, I think, that didn't think it would get this good this quickly, that there is like more people who, there's a lot of money on the sidelines. It's going to be pulled off the sidelines. I just worry, like, there's a lot of like the cryptomania is back and the coins and like, it's like the other day, I'm going to see if I can find this, but the other day I was talking to students about Coinbase. Because there's so many different coins like or cryptos that you can invest in on Coinbase. Actually, I'm gonna give you the number right here. There are 17,400 assets that you can invest in. By the way,
ridiculous.
2 weeks ago, I did this with my students, and there was only 16,400. So every day, like every week, there's more and more of these like being created.
Yeah.
And there's one on here. Let me see if I can call it Pepe.
I was gonna bring that up.
It has a market cap of $3 billion. Yeah. And it has a picture of somebody who, it's like the meme version of like, I don't know. It's not Kermit the Frog.
It's a squirrel.
It's a squirrel.
Do you know what that's from?
No, I don't.
Okay, so Pepe was a pet squirrel.
Okay.
And that's how that started. It was a pet squirrel that was, there was an incident where this house got raided and the pet squirrel was the pet of the family and the pet squirrel passed. And it was like, oh, this is so wrong. We should have, the squirrel should be alive. Like, so then they came out with Pepe. Because Pepe was the name of the squirrel, and they had they had an Instagram page for it and everything.
Okay, so you asked
me
what
I'm
worried.
Influencer. The squirrel was an influencer.
I get that, but
it
like
had deals. But it was making money.
Yeah, but you asked me what I'm worried about. This is what I'm worried about.
Okay,
that's what I'm. Yeah, things like that. 17,400 different cryptos to invest in. That's a little. When you think about the Wilshire 5,000, there's only like 5,000 stocks you can invest in. There's 17,000. I mean, I don't even know how you start to decipher that.
Well, the thing with creating a token, right? Doing this whole deal, it's the hurdle. I mean, there's really not much of any hurdle to do it.
No, it's still the Wild West as far as like getting approval and no SEC oversight and that kind of thing.
They call it a pump and dump, right? So like and I think there's been stories now that you're going to crack up about this. I don't think you saw this. There was, I forget what coin it was, but a 13-year-old pumped it up, right? Was live streaming while he did it, right?
Yeah.
Sold out, made a quick few $100,000, a 13-year-old, right? And basically was telling everybody on the stream, like, you guys, you know, fell for the pump and dump, and they all carried the bag on the way down, basically.
Right. Yeah. They all became bag holders.
This 13-year-old made a few $100,000 off a coin, and then just, you know, I guess he had followers or something, but
well, and
that's
you look
crazy. Doesn't that seem nuts?
Yeah, it does seem nuts. But you look at, like, you know, let me go back to Coinbase here. When you look at this, like, you think about, like, so many people. Donald Trump won the election, right? We didn't talk about that, but, you know, everybody knows Donald Trump, newsflash, won the election. So you have Elon Musk, which probably one of the best, like, risk ever. Like, he spent like $130 million on the Trump reelection.
Upside.
The
What
upside.
did he make on that?
Yeah,
$3 billion? More than that?
I mean, I think it's like 72 billion.
Something crazy
is how much he's made so far since the increase.
They call it
in
asymmetric.
Tesla. Yeah. But you look at, like, so he came up with Doge, right? The Department of Government Efficiency. And so many people don't realize that it's a play off the Doge coin and all that. But I know that has gone up like a ton since all this has started happening. So you're starting to get like that. I'm not saying it's not going to last a while or whatever, but you're starting to get, like, I just remember this, like, in 2022 before, not 2022, 2021, where you just had, like, just money being thrown at, like, so many things that it's just, like, what are we doing here? That kind of thing.
The thing, it's funny because when was I in your class?
2018.
So the cryptocurrency and Bitcoin thing was a little bit on the rise, but it's nowhere near where it is now.
Correct.
Right? And the one thing I remember you saying in class was you had a student who invested in Bitcoin. It went up, I think, it was at 60,000 at the time. And he couldn't cash out. He couldn't sell because there needs to be a market made at that price.
Right.
So he was sitting on a sell order that wasn't getting filled.
Correct.
I mean, yeah,
these probably better
coins,
now.
They're volatile. They move around, but at the end of the day, somebody's got to buy what you're selling.
Yeah, and Coinbase right now, like, I mean, a lot of times they'll try to get you to move it into another coin or whatever, and you know, but I think too right now, so Bitcoin's almost at 100,000.
That's crazy.
And so, but I think a lot of that is driven by, like, Trump and the possibility that maybe, like, I've read that, like, they'll do where basically a U.S. reserve in Bitcoin. And like he'll buy, the U.S. government will buy Bitcoin, and then other governments will follow suit. And so that's kind of part of that's driven this. But there's nothing that, like, and that's the hard part about Trump. Like, I remember, like, 2016 to 2020 when he was president the first time, is there's a lot of chatter about, like, we always talk about, like, market noise, but, like, there just seems to be so much more noise with him, like, because, you know, he'll say something, see kind of how the reaction is, and then he'll decide kind of what he wants to do. It's just kind of his style. I mean, whether it's right or wrong, it's just kind of the way he kind of operates. So you don't really know, like, is he going to do a reserve? Is he not? Like, I mean, there's a lot of there's a lot of people that speculate on that. But if he decides not to, it would worry me if I had a lot of money in Bitcoin, because I think it would fall probably, I don't know, 20 grand or something. You
gotta have downside protection. Yeah. I mean, he's not, I think, was it Microsoft, their last annual earnings, they voted on having so much percentage of their cash in Bitcoin. I don't think it passed.
Oh, okay. Yeah. I don't know.
What would
MicroStrategy and those, you know,
MicroStrategy for sure, but Microsoft, I think, voted on it. What would you, you brought up a good point. Like, Trump, right or wrong, but tends to stir up some momentum in different directions. Yeah. How do you approach that as an investor?
I think, like, I remember, like, back a couple years ago, you got to be really, really careful investing in things, or actually, I mean, I don't know if we want to call it investment or just a trade, but, like, doing things before you know it's going to go through. Like, you got, like, I mean, it's speculation is what it is. I mean, you're speculating. So you got to be very careful that you're not just speculating on everything, because there's a lot of stuff, like, one day it's this, tomorrow it's that. And so before you know for sure that something's going to change, or the regulation's going to change, or whatever, I'm very mindful of, like, trying not to make decisions based on what if. Because I think that more often than not, maybe you regret it. I don't know. Like, most of the stuff isn't actually going to come to fruition. Like a lot of the tax cuts and all those kind of things.
It's funny because I remember when I was in your class and we were doing the stock competition, right? One of the positions I had was Tesla at that time. And how I stayed on top of it because Elon was very vocal on Twitter.
Yeah.
I had notifications set on that guy. I mean, call it a cowbell. Anytime he moved, there was an alarm and I knew exactly,
Yeah.
But then it's like, do you want to be put in that position where you're investing in something that you have to watch that closely?
Well, I mean, it's,
probably,
I mean, being honest, I mean, I've been looking at like, when I look at companies, I look and see how are they connected to Elon Musk? How are they connected? Like what area of the tree? I mean, if you go back and read that book, The Founders, like the story of PayPal.
Yeah, PayPal Mafia.
And you look at all of the people that like Musk has been, connected to, and you look at like the connection with him and Peter Thiel and Palantir and Joe Lonsdale and Alec, all those. I mean, man, I'm like, so I want to know, like, because they're going to have his ear, right? Elon is going to have a straight line to Trump's ear. So I want to know, like, who are Elon's friends? How are they connected to him? How are they going to be able to, like, are they going to have an angle on Trump? Because I think it really is going to be impactful over the next 4 years. I really do.
Most definitely. Yeah. No, I mean.
And when you look at like Palantir, I mean, look at maybe the contracts they'll get. I mean, it's been unbelievable stock this year. And we got in on it. I mean, it's one of those things. I mean, it better to be lucky than good, I would say, I guess. I mean, like, it's just incredible the run that thing has had.
Oh my gosh. And they just shifted to the NASDAQ, right?
Just shifted to the NASDAQ, which means they're going to be a part of more funds. Yeah, for sure.
That's kind of a floor for the stock price to a certain degree, obviously.
Yeah.
There's probably, some other factors, but
yeah, I think that's
positive.
That's a good way to put it though. But I think of it more of as a floor than anything else. Yeah.
Mm-hmm.
But yeah, I mean, I just think it's, and all the geopolitical stuff. I mean, so we'll see. I mean, but I think that's going to be, you look at how the market's done. You look at how well we're probably going to close out the year. I mean, it really does make me a little nervous for February. Like, I really do want to have like some dry powder going into February, because February is typically the second most volatile month of the year. Historically, it's because you have, like, obviously you kind of usually have a Santa Claus rally. You finish the year strong. People are excited about a new year, all that. At the end of January, you start having companies report on how their fourth quarter went. And then there's just kind of this little, I don't know, kind of sell off in February.
Yeah, I'm really curious to see how the sales for Black Friday are going to be going into next year. Like, looking back, okay, was it a good spend? I mean, there's already the preliminary numbers of just Thanksgiving alone.
Okay.
So not Black Friday, but just Thanksgiving alone.
Right.
Adobe, they release it every year, has projected it was 7 or 8% over last year.
Okay.
And that's just Thanksgiving, like the day of Thanksgiving. Doesn't include this Black Friday, doesn't include the weekend when everyone's going to the mall and shopping.
Well, I saw that like the average price of a Thanksgiving dinner came down a little bit, which is a big deal.
Oh, that's good.
So, but I think it also too, like that number, people shopping on Black Friday is probably more of an optimism, means that people are maybe more optimistic for the future, which is always a healthy thing.
That's exactly how I saw it too.
I mean, so we'll see. I mean, it's just kind of taking all this stuff with like a little bit of a grain of salt, but just kind of seeing how we do here. And then obviously Trump's first 100 days, really important. What is he actually going to get done? And so that's why, again, I go back to just having like some money on the sidelines to be able to take advantage of that.
No, that makes sense. Trim up a little bit here and there.
Yeah.
Just put some cash away so that way you have it.
Take some of the gain, some of the gains we've had, just trim a little bit, like just take some of the gains, maybe before the end of the year, maybe right after the first of the year, just tax-wise, if you sell right in January, like you don't have to worry about the taxes for another year. But you just got to have, like, you can't just be a completely invested with the market at all, making all-time highs every day. I mean, like, I worry, like, so the Shiller PE ratio, have you looked at that lately?
I have not, no.
So the peak in 2021, before we had a pullback with the Fed raising rates, was at 38.58.
Okay.
What is average PE for the S&P 500? That's high.
That is high.
So the highest ever is 44 back in 99. And right now we're at 38.29.
Oh, wow. Okay.
So 2 years ago at the bottom, the bottom, we were at let's see, 30. No, lower than that, 28.
Yeah.
So we're
That's
climbing
pretty
on
low.
that.
I think, this is the time too where it all comes, you talk about this all the time, momentum, right?
Mm-hmm.
Where is the money going and where is it not, right? So looking for the companies now that, because people have to have money to invest in the Palantirs, the whatever, to drive the price up. They're pulling that money from somewhere. Where are they pulling it from? Because those are artificially going to be a little lower, potentially, depending on the company, and you can take advantage.
Well, some of the value companies probably. Mm-hmm. And then also I think people probably start using leverage in their portfolios, which normally you don't get all-time highs unless people are leveraged up, which is kind of worrisome, later on.
So who benefits from that?
The banks that they're borrowing money from.
Exactly. So it's like the gold rush, right? Like don't go after the gold, sell the shovels.
Yeah, but I still look like I don't think like Nvidia looks like a good deal. Like even though they've had a great run, I mean, but they still, when you see their numbers for like next couple of years, it looks tremendous. And then also like I think about like the M&A activity. I think that'll be one thing that Trump will be good for is just the number of mergers and acquisitions. So that's going to be great for Goldman Sachs, Morgan Stanley, those kind of companies. I mean, I think that you'll get some deals that go through, for that. So, I mean, there's always going to be like, again, there's somebody making money somewhere. You just got to try to figure out who it is.
Exactly.
So, but yeah, I think that's going to look pretty good.
So you had a pretty big, I don't know if you want to talk about it, but Guy Spier, you had the pretty big interview.
Good. Yeah. Big interview. That was the last episode. We got a lot to follow up on. I mean, not follow up on, but we got a lot to try to live up to that episode, I guess.
Yeah.
But it was pretty awesome. So it was pretty good.
I have a question. The first question.
Okay.
So that I think has been a goal for yours for a little while.
Yeah.
How did it feel? How did it feel to be doing that podcast, talking with Guy? Like, that's the thing. Like, you talk about consistency, right? Mm-hmm. It's so hard to be consistent. But when you think about how it's going to feel when it gets to that point of that goal is achieved, right? That's what makes it worth it. You just did that.
Yeah.
How did that feel?
It's a little surreal. Like, it's a little surreal. Like, it's like the dog that's like chasing the tire. And then you catch the tire, and you're like, okay, what do I do now? Like you don't really think about like what's gonna happen. Like you think about like hitting that, and then, but you don't really think about anything past like meeting him, talking to him, and he's so nice. I guess the biggest thing was like he's so nice. Like there's always that saying, and you and I talked about this beforehand, which is like, should you meet your mentor?
Yeah.
Are they going to disappoint you? Mm-hmm. That kind of thing, which is really kind of a thought. Like,
it's meeting your superhero, right?
Yeah. I mean, it's just, and I have not had good luck with meeting people in the finance world.
Yeah.
Like I really haven't. Like, and I talked to a guy about that a lot when we had lunch, but it's just like most people in the finance world, like have not been that nice to me, like, or not. And it's not that they're not that nice, but like, you don't feel like people are really like helping you out type of deal. Mm-hmm. And so meeting him was great. And he just is as nice as you think he would be, but he really is one of those kind of like pay it forward type of guys.
Yeah. Like,
and he uses the term long-term greedy, which I guess I am too. Like, but you just feel like, okay, this is somebody who speaks my language and has invited me in, and I would do it. I won his charity lunch, and that was one of those things too, where if I didn't do it last year, I would have thought about it this year.
Yeah.
And it'd probably be more expensive this year. Mm-hmm. And then if I didn't do it this year, I would have thought about doing it next year. But it's really made me like, now I have a list of people that I want to do that with.
That's awesome. Yeah.
So that's kind of maybe I don't know, maybe I'll hit it, maybe I won't, but I have like a list of people that I would love to do the same thing with.
You have this, you've told me this before, time's going to pass either way. Right.
Yeah.
And when it comes to big decisions like that too, like bidding for that charity lunch, you know it's going to be good, but there's that part, that hurdle a little bit where it's like, okay, I know it's going to be good, but is this something I should do? Is this something I should do?
Yeah.
But I will commend you on this. You're so good at just throwing yourself out there and seeing what happens. And I kid you not, it works out for you every time. It bugs me as your friend because I'm like, man, I take L's every once in a while, but it always works out for you. But I'm not surprised that this one worked out. And hearing the podcast, it was awesome.
Yeah.
It was very, very cool.
Yeah, I'm excited. So the whole video thing, right? Mm-hmm. So the whole video, so when I rented a studio in New York, right? And so I rent a studio in New York. We meet up there, and they asked me like, what quality you want? I'm like, I want the best quality you got. Like, best quality you got. Right, best quality you got. Like, when am I going to have the opportunity to do this again? Never rented a podcast studio before. Well, we do it in 4K. Well, it was an hour and 40 minutes, man. Yeah. I mean, the size of these videos were so ridiculous that, the size of these videos were so big that we literally like couldn't use them. Like the amount of space is insane. So it just so happened that my daughter like had a follow-up appointment for scoliosis surgery in New York. So I was there a couple days ago. Mm-hmm. Studio was nice enough. Gotham Studios, went back there. They compressed the files for me so that we can have them. And so now the team has them, and they'll put the video up. But it's going to be really like the video is going to be really good. And I think I actually think it'll be a game changer. I really do.
That's awesome. No, listening to the podcast was awesome. Okay, another question.
Okay, all right.
When you were sitting down with him and you were interviewing him, talking everything.
Yeah.
What was the one thing that like was kind of like you've read his books, right? We've listened to his interviews, but what was the one thing you're like, oh, I never would have picked this up. Listening to his interviews or reading his books, like you have to be with him to understand this part.
He's a really calm person.
Okay.
Which, like, one of the things I wanted to, like, and I didn't get there, because one of the things I wanted to ask him was, like, I always think about, like, the market cycles. Like, how do you, the job is easy when the market's doing well.
Yeah. High tide lifts all boats.
Yeah. Like, this job is not hard when things are going well. Everybody seems smart. Everybody seems like they know what they're doing. But every single day, like even this year, good year, last year, good year, I'm still haunted by 2022. Like so painful. Like that year was so painful. Like people see it on a chart and they're like, oh, it's not too bad. Like it is a severely painful year for me that I still think about. I think about how do I prevent that from happening in the future? Like how do I prevent from having a bad year like that in the future? Like that's what I'm constantly thinking about right now. And with Guy, he thinks so far in the future. Like I think he thinks in blocks of like 10, 20, and 30 years.
Wow.
I mean, like he just doesn't seem rattled by much. Like, and that was like, I'm not going to call it annoying, but like I want a little bit of that. Like I want a little bit of that where I'm not worried on day to day, but we manage money differently. He has a hedge fund. Like, he has a hedge fund. So he has people like they can only request money once a year. And I found out some of his investors can only request money every 5 years. So they're locked up for 5 years. Whereas like the way you and I manage money, if somebody can be like, I need $100,000 in 5 days.
Yeah.
Like you don't have that kind of time. So maybe because of the way that he sets that up, he gets maybe a sense of calmness, but like he just seems so much calmer. Like, I don't know. That was the one thing that kind of like, he just wasn't the whole time. So like the way that it worked out. So, and this is kind of the backstory that people who listen to the episode wouldn't realize. The agreement was lunch. And the agreement was the lunch appointment was an hour and a half is what we agreed upon. We were there for 4.5 hours.
That's awesome.
And then the next day he agreed to do the podcast with me, which was 2-hour appointment. And then after that, we went and had lunch again. And then after that, we went to a coffee shop.
Yeah.
So he gave me a lot more time than like as advertised, But okay, so the reason I'm telling you that the whole time, how many times did he check the market?
0.
Not a one. Like not a one did he check the market.
Yeah.
Which, did I check the market? Yeah, I did. Like I did, I totally did. So that was a big deal. Like was just like that sense of calm that he has. I don't know if it's like maybe the length of time he's been doing it. He's gone through 2008, 2020. Like he's gone through the cycles, so he's not that worried about it. I don't know.
Yeah. No, I that's a skill. You got to think about it, especially in this industry, right? It's a skill because that's the one thing I always say about like it's different from real estate to the public markets, right? Is like there's always a ticker. Yeah. And information flows and it will move that ticker.
Yeah.
Right? And it's our job to look at it and take it not for what it is right now, but for what it could be down the road, right?
Yeah.
And he's so used to just being even keel. How do you think? Actually, it's a better question.
Yeah.
You gonna say something?
I was going to say, like John Wooden, the basketball coach, UCLA, he always talked about not being too high or not being too low. Just even kill. Like I think about that all the time. Like never too high, never too low. Like these good times in the market, not to buy into it, not to think I'm the smartest person in the world, not to think all that. When times are bad, not to think I'm the worst person in the world. Like things are gonna. I mean, you have to be thinking about the next season. When it's summer, you think winter. When it's winter, you think summer. Like you have to be thinking like that.
How do you develop that skill that he has? Like, how are you going to develop that?
I think just, the same thing. It's like time, it's like everything else. It's like time in the market. I mean, that's like going through, you set up your life in a way where, he controls information flow into his life. I will say that. That's another thing.
Talks about that in his book.
He's like, he controls the information flow. Like he's not trying to get rattled every single day. He doesn't want that call to action that we discuss all the time. And that was the other cool thing about meeting him. Because, there are people who like say something in a book, but they don't live like that. You know what I mean? Like to actually see somebody who's actually doing what they're saying. Yeah, like that kind of thing. But then also too, there's things that like bug him, or I'm just going off of spending some time with him. A blip on the radar. But like there was also some things that we discussed where like I was happy that he has those same problems.
Like makes it real. It makes it real.
Yeah, and it just makes you feel like you're on the right path. I mean, I think that was the biggest thing for me, like with that whole lunch.
Okay, that is the coolest piece because that's like an affirmation, right? It's affirming you that everything you're doing, the consistency, and it's not just one thing, right? Like there's one thing to be coming to the office,
right,
doing the hard work, but it's like, he talked about it in the podcast, like and this is 100%. I hope I get this from you, but you have this internal scorecard where you're just so consistent in every other part of your life, and that pays dividends, right? Like it's not just doing the work of coming in and making the best portfolios, making the best decisions, right? But it's also like it bleeds over from, okay, are you getting up at 5 a.m.? Are you getting up at 5 a.m., reading the market a little bit, going on a run, doing everything to take care of yourself and your mental health, right? So that way when you show up, you're showing up, you're 100% best possible.
Yeah, the consistency is key. So we're talking about like goals for next year and stuff. Like one of mine is like, how can I be more disciplined? Like, how can you? Yeah.
Okay. See, now that right there is all you need to know about Ryan Peckham. Most disciplined guy I know. But okay, next year I just want to be 10% more.
I really do. Like, I'm thinking about like, how can I be a little bit more disciplined? How can I read more books? How can I be a better like teacher? Like all of these things. Like I think about that constantly. Like, how do I not waste time? Like, how do you not waste time? There's a lot of time. There's a lot of wasted time, I feel like. And part of it is like, it's the limiting part of being a human. Like you can't absorb all the time, but I wish I could. I wish I could absorb all the time.
What gave you that? What initially gave you that thought or instilled that in you? Where it's like, okay, make the most, because you're saying make the most out of every minute, right?
Yeah.
What was like, what gave you that?
Fear of like early on, like fear of failure. Fear of failure, 100%. Like just being afraid of being a failure in every sense of the word. Like whatever. Like, it's so. I think Nick Saban. I saw this earlier this year. I thought he put it as best as anybody I've ever seen. He said, "You're either going to live with the pain of discipline or the pain of regret."
Ooh, that's pretty good.
It's pretty good. You're going to pay the price somewhere.
Yeah. No, I'm right there with you. I think one thing that I think I'll add to this is and I was having a conversation with a guy today about it, older gentleman, the pursuit of a goal. Is it the goal itself that is going to be the best part of this, or is it the pursuit?
No, it's the pursuit.
It's the pursuit, right?
It's the pursuit.
But there is a certain skill to be had in knowing, like when you're in the pursuit, to take a moment and be like, okay, yeah, this sucks. Whatever. Yeah. If you're on a running plan and you're training for something and it's like, oh, this 5 a.m. workout's going to suck. But you got to take that part to just know, all right, I'm going to look back on this and it's going to be, this was awesome. because it's the pursuit of it. You're chasing something.
Yes, it's the pursuit. Like if you run a marathon or whatever, like the training is the hard part. The marathon is actually the victory lap because you're there with like however many people. You're doing it with them, like, you know, it's the runs that are alone that nobody sees. But everything's an anchor, man. I mean, like if you're doing a run and you're thinking about like, you know, I think about what I'm going to talk about on the podcast. I think about what I'm going to talk to clients about. I think like it's kind of a, you know, it just starts to like grow on itself. And I think that's why like people who have goals, like, do I wish I could turn it off sometimes? Yes. But I can't. Like, so now have the lunch with Guy Spier, right? So now I'm like, Guy knows so, like, that's the other thing. I told him this, like, he is a super connector. Like, so many people in finance flow through Guy. Like, he knows so many people. It's actually shocking how many people he knows. And it's like, I'm like, okay, who else in finance do I want to talk to, right? And I'm gonna like, I hope to be able to like have that kind of relationship with him on like just a certain level of like being able to, you know, get an introduction or whatever. But I think that people will see the interview with him. I can send that interview to other people and I can be like, hey, I would love to talk to you. I'd love to take you to lunch. I'd love to whatever. Like, I want to, like, I'll come to you. Like, I want to have a conversation with you because I think that there's so much to be learned from people that have done a good job and, you know, that have, you know, kind of created their practice or their, you know, their environment or whatever in a certain way. You can just learn so much. Like, I mean, it's just amazing. And I know there will be some that'll be horrible.
No, no one knew they're all going to be good. But it's a leading question.
Yeah.
I have an observation, but okay. I do want to ask you. When you say whoever it is that you interview next and the next person, right? What do you believe is going to make your interview different than everybody else? Like, you know,
like if they're money managers, like
whoever,
Guy?
like, let's just say you interview, you know, Monish, right? You interview Monish, and what's going to make that interview that you do with him different than the interview that he's done with everybody else?
I don't think about it that way. Like, okay. I don't think you can think about it that way. Otherwise, there's too much pressure.
Oh, okay.
So I look at it as like, this is a selfish way to look at it, but I'm like, this is kind of for me, and I'm letting people in on the conversation.
Yeah.
So that's kind of what I did with Guy. I was like, man, these are the things I want to talk about. We'll see where he leads it. But it's like, I want to know this stuff. This is kind of for me, and like other people can listen to it. Because I think otherwise, like, I mean, I'm not a journalist. Like, I'm trying to do things that are like, what I want to know about their habits. I want to know what are the things that they're doing. Like, I want to know, like, how can I get this, you know, can I get a little rub from, you know, who they know, you know, like that kind of thing. Like, because to me, it's like, okay, I meet with this person. What can I do? What can I take from their world, be on their radar? And how can I implement that in my daily life? Otherwise, if you think about like, how are other people going to absorb it? Are people going to like it? Are they not? Like, you have to be true to yourself. Otherwise, I don't think it works.
There is such power. I totally agree with you. There is such power in just copy and paste. Whatever they're doing, if you want to follow, right? You want to achieve whatever it is, copy and paste. I mean, it's already been mapped out. So like what you're saying, like, what can I get from him? Right.
Right.
That's part of it. But the one thing I'll tell you as somebody who's listened to the podcast is that most podcasts, you know, when you're talking on a finance topic, it's what's your checklist? What's the, you know, the biggest win you've had? How do you analyze this? What do you think about this market? What about rates? All this other stuff. Listening to yours, you get to the person itself, right? Where it's like, what makes Guy?
Right.
I thought that was super cool.
Well, I think mine was a little bit different because it's like, I actually manage money, right? Like, I'm coming at him differently anyways, but all the numbers change, right? So like the interest rates change, the setup of the market changes. Like, I understand all that, but I want to know like day to day, like, you know, he protects his time. He gives himself time to read. He gives himself time to like study the market. I mean, as your practice gets bigger, there's more demands on your time. How do you protect your time? How do you still give yourself the ability to like look up stocks and research and do all the things that made you successful? How do you protect those little pockets of time? Like, all of those things. And then with every single person, like him or anybody else, it's the consistency and staying in the business and giving yourself the ability to like stay in, like to go through tough times, but still come out on the other side. Like Guy, he's very aware of like what makes him nervous, like the types of investments that make him nervous. Like he doesn't want to hold that stuff. He doesn't want to blow up. He's seen people blow up. That's when basically hedge funds, over leverage themselves. They're out of business. Like he's not going to do it. Like he will not do that.
That's awesome.
So from that standpoint, it was really cool. But it's also one of those things where, yes, it was a goal. But it's also like the process that it took to get there to be like, I thought more about like the good decisions I have made that allowed me to sit in the seat across from him. I thought more about that.
Yes. Because you had confidence because you did the hard stuff, right? You had confidence because you knew that you did the prerequisites, the things that may not, the days that you're showing up and trying to grow the business when it's not the most easy, it's more difficult, right? And you're staying consistent. I think that's really where the confidence piece comes from. Being confident in that position is because you kept those promises to yourself.
Yeah, but also like, I mean, there was like, the imposter syndrome and like there was a worry.
Well, that's gonna,
that's I mean, you're not putting yourself out there if you don't feel that a little bit. But it's also like the nervousness is like, can I hang with him in a conversation about finance? That was like, that was like, if you're talking about like, deep down, like, was that a worry? Like, he's going to ask me something. Like, we went on that accounting journey, and I'm like, dude, I don't teach accounting, but he's like, and I'm like, all right, I can, but being like, sitting there and being like, all right, I can actually have this conversation and feel like I deserve to be here. Mm-hmm. Like, that was like, you talk about, when you think about, it just gives you more confidence for the things that you're trying to do. It's like, all right, I can be in the room. Like I deserve to be in the room type of deal.
That's so
awesome. that piece was pretty neat because it's a lot of years, man. Mm-hmm. I mean, it's, he put that book out 10 years. We were almost at the 10-year anniversary of him putting that book out.
Oh, I didn't know that.
But it's also like, being 24, 25 and, it's funny. Like I thought about this too, before we came, I was watching some YouTube video and I get this ad for like, master the market in 3 steps. Type of thing.
Get rich in 10
minutes.
And
I'm sitting there going, man, I wish.
Yeah.
Like, do you realize how much time and effort that I've put into this thing? Like, I mean, and you too, like, you're starting the time and effort you put into reading stuff. Like, I wish I could master market in 3 steps. Mm-hmm. I mean, it's just absolutely like, it is seriously like a lifetime journey. Like it's not something, there's no end date. And that was the one thing like Guy talked about too. Like it's not on the podcast, but he talked about how like he has friends start like the challenge in his life now is like people are retiring, people, he's got friends there and he's like, I have no interest in that.
And retiring.
Right.
Because he enjoys his job.
Yeah, he enjoys
what
it.
He's doing. So
yeah, why would you?
I agree. I think that's a gift.
You got nobody coming in saying, hey, we got a pizza party this Friday.
Yeah. We're gonna, it's time to retire.
Yeah, I mean, like, there's no, when you're kind of controlling your own destiny. I mean, Buffett at 94. I mean, I'm not saying you got to go that long, but but I mean, what else are you gonna do?
I think that's a great way to live life.
I think it's pretty good. So no, it was better than my expectations. So it was good.
That's awesome. It was good to listen to for sure.
The thing is now is like, who's next type
who's
of
next?
deal. Yeah. Who's next?
Do you want to name somebody?
No, I mean, I got a list. I got yeah.
In the shadows.
Yeah. I think about like, who do, the thing, it always comes back to like, who do I genuinely want to talk to? Cause you could tell in that podcast, like I was genuinely interested in talking to him.
Yeah.
And I've done others where I haven't, like it's like, and that's the thing about being true to yourself.
Yeah.
Like, somebody you really, really want to talk to.
Joe Rogan talks about that. Yeah. Where he's like, I only want to talk to people that I'm actually interested in.
Which has got to be hard after doing like, how many episodes has he done? 2,000?
Well, that's why he does a little bit of repeats,
He brings people back in.
Yeah. Let's get, whoever back on. Let's get Elon back on. We'll just keep it a little more tame this time.
I would love to interview Guy again. Like,
yeah,
I think it'd be awesome, but I mean, who knows? I mean, who knows if you can recreate it, that kind of thing, but it was fun. I mean, it was pretty interesting to see like that studio in New York. I mean, just the number of people that come there to do, like, there's people who go there, like that's where they record I mean, it's pretty interesting how they do that. So
that's awesome.
Man, we're 45 minutes in.
I was gonna say, yeah.
We are 45 minutes in. We have so much. We're gonna have to do another one before the end of the year.
Let's do it.
All right. So we'll close it up here. You got anything else?
That's going to do it.
You good? All right. Well, as always, don't mistake activity for achievement, and we will see you next time. Thanks, everybody.